Hi, good morning, everyone. Um, I think it's a lovely day, um, and I think it's hot and humid outside. So, first of all, this is webinar two um, in the series where um, what we are trying to do is that we are creating a platform where Medgate Today, in association with Medical Fair India, Methodology of India, is try to create platform which can educate a large fraction of community in healthcare sector, particularly when we are dealing with Medical Fair India. Having said that, this is a webinar two in the series. First of all, I'm very thankful to Afzal Kamal, a very dear friend, patron, and a big supporter of Medical Fair India, who has largely supported a lot of initiatives in India with respect to healthcare and medical fraternity. A very well-known personality with respect to knowing academia, doctors, hospital owners, uh, the allied communities. So when he came back to us saying that this is a webinar too, and this is the topic, I was a little skeptical because this is too niche a topic. And then after a series of discussion with our mentor today, Mr. Vishal Gandhi, we agreed that this is an ideal platform to talk about initiatives like this. Having said that, uh, I would like to request Afzal Bhai, like we all call him Afzal Bhai in the industry, to kickstart and give an introductory note about this particular webinar. Once he kickstarts that, I will take the opportunity and the privilege to take this forward with our mentor, Mr. Vishal Gandhi. So, Afzal Bhai, over to you.
Thank you, Surajit, for a lovely introduction. I am not that. Good morning, industry colleague and friends. I welcome all on India's top healthcare media and number one exhibition on medical equipment and technology platform. That is Medgate Today and Medical Fair India. Presenting our second webinar on decoding fundraising and merger acquisition strategies. And there is a famous saying, leaders create more leaders. Yes, ladies and gentlemen, we have an expert, leader and mentor, Mr. Vishal Gandhi. Give a big round of applause for him, ladies and gentlemen.
Thank you.
We, as a responsible media and medical fair as an industry platform for a stakeholder, has chosen the topic in this pandemic to help our industry colleagues in fundraising and finding a solution to raise a fund. We have expert here, can ask any question to him directly. Just type your question with your name, designation, company name. We will try to take all the questions right now. Otherwise, we can catch you later, or you can catch Mr. Vishal later also. Healthcare finance has been under stress even before COVID-19. Ayushman Bharat, despite some operational hiccups, was still a catalyst for healthcare ecosystem. COVID-19 has also resulted into not only social but financial distancing for healthcare providers. Certain sections of healthcare supply chain have been unprecedented but lopsided growth. I am sure this webinar would address the supply chain of finance and funding and do much needed course correction in industry ecosystem. Industry must take a note. And now I will I will give the mic to Mr. Surjit Bit. Now over to you, my dear friend moderator, Mr. Surjit Bit. He will give you more insight about the organizing this webinar and facts about the funds and finance. Thank you so much. Over to you.
Thank you so much, Afzal ji. I think it's a proud privilege that we both Medgate Today and Medical for India have been trying to achieve something, not only during this lockdown period. So what we decided that both the entities will bring such episodes from time to time to educate the market, to create a virtual platform, because there are a lot of community stakeholders who are not able to see, not able to understand, not able to participate in our forums like this. So this will help us to penetrate in every nook and corner of India to understand what the real voice is all about. So without further more ado, good afternoon, everyone, once again. On behalf of Medgate Today and Medical Fair India, we are pleased again to welcome you all in the webinar series, Decoding Fundraising Strategies, When, Where, and How. And this is specifically for healthcare, medtech, biotech, digital health startups. I will be in conversation with our mentor in this topic, Mr. Vishal Gandhi. But before I introduce Vishal, or I request Vishal to speak few words as an introductory note. Let me just tell you who Vishal is. Most of the industry players would know Vishal is a successful entrepreneur. Initially started as an entrepreneur, and he is very successful in terms of delivering success stories, particularly in M&A fundraising techniques in the market, in the healthcare sector. It's a very sad day as we speak because we have crossed 1 lakh COVID cases. Um, it's alarming. It's really, really alarming. But as we say that, the doubling rates had improved for all of us, so does the mortality. And it is so pertinent that we are talking about this kind of a topic because post the close down or post the lockdown is lifted and all those things, we need to bring a new normal. That's a term which we have been using in the industry. But bringing the new normal should give an opportunity for startups, incubators to start a new life, to be more ambitious, to be more positive, to be passionate about what they have been doing and what they intend to do. So with this, I have a pleasure to have our mentor, Mr. Vishal Gandhi. Vishal is the founder and CEO of BIORx Ventures Advisors Private Limited. He's having around 20 years of strong experience in deal making in terms of investments, merger acquisitions, due diligence processes, exclusively for the healthcare sector, as I mentioned. We are really proud that he's among the top 20 dedicated healthcare investment bankers in the country. His company, BioRx, have been working very closely with private companies and foreign entities. So I think 75 private companies, Vishal, along with 8 foreign MNCs, has made their foray since the inception of this company in 2012 towards venture creation, scaling up, investment business models, ranging from pharma, biotech, contract research, medical devices, digital healthcare, covering the entire gamut of services, hospitals including super and single specialty. He has been quite quoted in the business papers for his views, given his superior understanding on the healthcare sector. A little bit of his background prior to BioRx. Vishal has held senior positions in Yes Bank, Ranbaxy, and he started his venture with Dabur Support, which is now a 500 crore entity plus revenue venture catering to the niche molecular diagnostic services for cancer and Dabur's Research Foundation. Academia-wise, Vishal is an MBA from Accelera Jamshedpur, and he holds a management degree in a master's degree in biotechnology from Central University of Hyderabad. He is a member of various task forces of industry, FICCI, CII, ASSOCHAM, PhD Chamber of Commerce. Most importantly, why he is here, because he has been mentoring startups at IIT Delhi, IIM Ahmedabad for almost 10 years now, almost a decade, and now have been actively associated with many life sciences focused incubators, and has a niche experience of policy advocacy and has contributed to first ever national biotech strategy document, which is published by Department of Biotechnology, Government of India. And that was done through FICCI, if I'm not wrong, in the year 2005. So, so here he is with us. My initial question to Vishal is, Vishal, of course, as the industry says that you have been a very promising young entrepreneur, catering your thoughts to the healthcare sector. I would like to understand more, or I think the entire audience would like to understand more. What are the key elements that made you to bring this into the limelight of the healthcare sector, or rather than you saying that the startups community which are there in the healthcare sectors are much more robust as compared to other sectors? So that's a first question which I wanted to ask. But before that, I put the ball to you to give a brief introduction, and if I miss something, over to you, Vishal.
Yeah, so thank you, Surajit and Afzal Bhai, for putting this together for us. Much appreciated and a kind introduction. And, I think you had set the tone very rightly. And good afternoon, my fellow colleagues, participants. It's indeed a great pleasure to meet all of you over the Zoom. And I think Zoom has become a new normal for all the stakeholders now. And all we know is Zoom has actually a market cap which has almost become 50 times more than what it was pre-COVID. So I think this is a great opportunity to invest in Zoom stock if we get an opportunity to do that. So in terms of, I think before I begin that, I'd like to salute our heroes, the healthcare workers, and I'm sure all of us are directly contributing to the sector of healthcare. So, our salute to the healthcare workers who are really working behind the scene to battle this deadly virus, a global deadly virus, I would say. Times are uncertain and, unthinkable. Nobody could imagine that this global pandemic of this nature would actually happen. So let us all join, and pray together to make a world corona-free very safe, very soon, so that we can all again go back to the normal routine and contribute to the economy. I think economy is suffering, but I think on the hand side, I would say that we all are stakeholders of healthcare, have an immense role to play to be able to get this economy back, at least in India. So we all know that, healthcare as a sector, I think Surajit did briefly talked about various subsectors. So what does healthcare encompasses? Because, we do have audience coming from all subsectors of healthcare. So for us, the subsector of healthcare essentially means starting from pharmaceuticals. My original experience working for Dabur Pharmaceuticals was about developing anti-cancer drugs. Then over to, working for Ranbaxy, wherein I was responsible for starting a venture for Ranbaxy on molecular diagnostics and genomics. And then later working for Yes Bank for about 6 years, where I was heading the healthcare vertical for actually helping companies to finance, which is essentially debt and equity. So one of the things I think we all know, debt. I think debt is something so common to all of us. Whereas equity is something that, most of us may not be very familiar with, but it is an instrument available to all the startups to be able to get capital, and as they get capital, they will be able to make a difference in the life of the customers, their stakeholders. And so one of the things which I always felt that as an entrepreneur, people really don't know much about equity capital. People don't know much about the merger acquisition strategies, how they can unlock the value. We keep thinking about borrowing money, but, for a startup, borrowing money from the bank is also not easy, because, there's a limitation to which you can borrow money, and thereby there's a limitation to the growth of a venture. You may have a very great venture, which is scalable venture, but, because you may not have the capital to raise, capital to be able to support the growth. So only thing that you need to dip onto is the equity. And since some of us do not have the adequate understanding how equity works, so, with the Medgate and with Medical Fair India, we thought it will be appropriate, forum to be able to educate, some of you about the fundraising process. And as you become more capable in understanding fundraising process, you can also explore this as an option, and there are various stakeholders, in fundraising, and I'll be discussing about all these stakeholders, the process, with all of you in next 20 minutes, And of course, we will also have lots of Q&A, which, my able colleague, moderator, Surajit has very wonderfully, I would say he will be able to take this forward. So just to set the context, so as you would have seen the note in terms of the context that we are talking about, I wanted to bring to your, attention a few words. You may actually have heard it, or you may not have heard it before. But, equity is a very important aspect, for one's growth, because every business model can survive and can thrive only utilizing the appropriate structure of capital, and that capital could come through a debt or come through our equity. Now, most of us, who are the founders and entrepreneurs, I think we all put in our money to start with, and that's actually is called equity. But what happens as the business demands more generation, more capital, is needed. And we, as a founder, we are not able to justify the growth by putting in very less money. So that is where, we will need to seek capital from outside and make other companies or other stakeholders or investors as partners in the game, so that we are able to grow this together and create a better value. And so that is the power of capital, which is essentially equity capital. So in my terms, I call it equity as a smart capital. And there are empty number of examples that I can share with you during the course of the presentation. But I think equity is a very important instrument for raising capital, and also for able to unlock the value of the company, because all of us as an entrepreneur, we only build equity value. And it's very important, we must be able to diagnose that, what kind of equity value I'm growing on a daily basis, and there is a way to map that value. So it's very important that we must have a good governance. We must have a good I would say a good capital structure. It should not be so much debt loaded that your company cannot even pay the debt, and eventually it becomes the stress asset. And I think more particularly, since I have been looking at healthcare very intrinsically, and if you look at in last 10 years, a lot of hospitals have mushroomed, and with the support of entrepreneur doctors. But because they didn't have the astute understanding of the financing, the debt to capital, I would say debt to equity capital ratio was skewed towards debt. And as a result, when they were to start the operation of a hospital, some of them could not start the operations of the hospital because they never imagined that what is the right way of looking at financial model that is required to run the hospital and to sustain the operations from the hospital from the commercial day of start. So, I think this is open secret that all of you would know, that some of the hospitals, when they start, they really require a working capital. And so what they try to do is whatever working capital is sanctioned to them, they try to use that working capital to complete the project. And in result, when the project is completed, they don't have anything left, and that's when, they look for equity. And that's where the equity is not going to happen because the company is already reached a stress. So I think the timing of raising equity, is also very important. You just can't raise equity when the times are uncertain for your business,
Right,
So
right.
I will be able to share with you some of the insights that I've learned and I've practiced over the last 20 years. But, trust me, 1 hour lecture and 1 hour interaction is certainly not enough, to encapsulate what I've learned with, working with different organizations, working with my clients, so it will be very difficult for me to put together, everything in 1 hour. But having said that, I'll try to do my best. So I'll be introducing you to some concept, while, before I take up Surajit's question, so that you guys are more familiar with the terms. So I think by the end of this webinar, if you're able to get understanding of some of the terms that I'll be using, I think you will be able to understand the capacity, how to do fundraising. And of course, it's always good to work with the mentors, advisors, and everybody to be able to put together a good deck so that people can believe you and people can fund you for your business models. So one of the things that I'd like to share with you, that grant, I'm not sure how many of you have heard about grant, how many of you have heard about soft loan, how much you have learned about angel investment, venture capital, private equity. So I'll be taking you through these words. And of course, then I'll be also sharing with you that, the capital structure that we're talking about, which is equity, is not something that Vishal has introduced this term recently in healthcare. It's been going on for last 15 years. There are more than 1,000 deals which has actually happened, wherein people, companies, entrepreneurs have been able to raise capital, in the form of equity, and these are private companies. I'm not talking about, public companies, because public companies can always go back to the capital market to raise capital. But I'm talking about private companies' ability to be able to raise capital in this sector. I think it's been phenomenal. In fact, one of the most attractive sector for investors is healthcare. And because one is it's defensive, And second is that, the healthcare brings a lot of credibility, and thereby the risk mitigation happens when you invest in healthcare. So I'll be also talking about what are the various due diligences processes that needs to be undertaken before you actually open your house for seeking an investment, so that you don't go wrong, and you also are able to command a better value for your business. However, valuation is science and art, but I think it's also important to really make sure that your venture actually is investable venture, rather than running the process and then later after 3 months you get to know that your venture was never investable. So I think it's very important to work proactively, look at the diagnostics of your business venture, and I'm sure it is not going to happen in 1 day or 2 days. You will need to work with people who have done this, and to be able to create better value for your healthcare venture. And of course, then we will also talk about, what is the lingo of term sheet, shareholder agreement, share purchase agreement, and have my colleague Puneet also on this Zoom call. And I will request him to briefly introduce you to these 2-3 terminologies over a period of time.
Vishal, I just wanted to interrupt over here because
yes.
I think we have currently a lot of participants who are familiar with certain terms.
Yeah.
There are participants who are familiar with terms, but the thing they need to be explained what these terms exactly mean.
Sure.
There are participants who doesn't want to, who actually are not aware of the terms which we would likely to say. I think it will be a good understanding, a mixed bunch of things. So what we will quickly do that once you present to the audience what the steps are or what the sequence is and what these terms mean, we'll also try to take a question answer maybe say 15 minutes from now from the audience, because there are a lot of questions which are coming from the audience, because that will, I believe, will make things a little more interactive. And
yes.
as you rightly said, this is an understanding, this is a platform to learn. To learn more, you need to interact with Vishal Gandhi separately. So from time and again, you need to also tell the audience that if they need to get in touch with you directly, how they can. One important thing what you said about the brief about fundraising is, what I believe is that once the fundraising processes start, that there are it takes a lot of time between the due diligence process and the term sheet process, and that is where between the due diligence and the term sheet process, the science and the art of valuation happens. I hope you agree, because this is what we discussed the other day in terms of your presentation. That would be more interesting feature for a lot of startups, and a lot of participants over here would like to know that what are the parameters of due diligence, what is the length and breadth of it. The second thing is, what are the term sheets, the execution and documentation. The execution and documentation doesn't have an end. It can be a 2-pager, it can be 100-pager, it can be, you can go on and on and on. From a mentor like you, people who like to understand how they can minimize all these efforts to create a constructive approach towards the fundraising processes. Also, while you present, and I'm sure you will include this, I will also like you to highlight what is the life cycle of a company in terms of funding, which is very, very important. Because again, the tenure can be short-term, mid-term, and long-term, what works well. So these are some of the pointers which you should include, I think, for a greater understanding to the audience. So over to you, Vishal.
Yeah, thanks, Surajit, for setting the tone once again. So I think I'd like to just briefly share that what are the facts that one must know before you actually start the process of fundraising, as asked by Surajit. So one is that, you need to research your investors that you are going to pitch. It's very important, that you don't send a mail to 200s of them or 300s of them, because, if you do that like a mass mail, I think the chance of one person or two people out of 200 coming back is like, just 1 or 2%. So I think it's very important that you must understand, you must research your investor. Then of course your pitch should be so great, it should be so concise. It should not be like a story. It's important to, bring a story, but, it shouldn't be such a long story that people get lost. It should be like a selling an idea in no time, And I have seen, the best pitches that I have understood, actually the entrepreneur took only 1 minute or 2 minutes. If you can't connect in 1 or 2 minutes, and if you can't share your story or the business plan, I think you don't really know what you are doing, you know. And one of the good things for an entrepreneur is to be communicative, be very effective in communication.
Right.
And I think that's a measure of your chances of raising fund, you know. And and the third is, of course, as I said earlier, that, you know, one needs to avoid long presentation. So Surajit asked me that, you know, should it be like a 100-page document or it should be a 5-page document? I think, you know, in general, I don't think anybody has time to see more than 5 slides.
Absolutely.
So if you can actually showcase all your story, starting from the opportunity to your business model, to your competition landscape, and why you think that you will only succeed, I think if this encapsulates the presentation, I think you've done a good job, you know. I don't think investors are really looking for a long DHRP, which is called draft red herring prospectus from you, because you as a company or a startup, you know, is at a stage where you only need to or operations, you know. You may not need to know completely what's happening in the regulatory environment, you know, because there are certain regulatory environments in healthcare, agri-tech, and all that, you know. It will evolve, you know. I work for a startup, you know, they came to me and said that, you know, we want to develop waterless shampoo. I said, like, where is the regulation for this? So sometimes, you know, as a startup, it's important that, you know, you must understand things, whether, you know, what regulations are required, how am I going to sell it, who will be my target customers, all these things needs to be very clearly established. And a lot of due diligence, what we call as commercial due diligence, needs to happen before you actually go and you do your first pitch. Because if you get a pitch time and if you don't sell it effectively, you may not get a chance to pitch to the same guy for another 1 year. And I think that will be the loss of opportunity. And none of us would like that. You should lose that opportunity, right? But prepare smart and be brief. You know, and I think it will really work. It will really increases the chances of you raising funding. And it's very important to highlight the financial forecast. You know, like people today, when I see the pitches, I see almost like 7 pitches a day. And so out of 7, I would say sometimes even 1 pitch only is talking about financial forecast. And the rest, you know, people only talk about how much money they need. But how much money you need is important, but how it's going to shape up into the financial projections is actually very important, because investors looking at investing in your future. And if he has no visibility that how you are going to actually unfold your venture with your commitment, then certainly, you know, you are not going to attract investment. Even if you attract investment, it will be like a problem in investment. You may be forced to give him, you know, you may be forced to ask for an exit, and at a price that you may not be able to even, you know, get the exit. So I think there are challenges, and it's very important that you must seek the attention of only those well-researched investors, those who truly believe in your product and idea. Because I have seen, you know, like just sending mailers to 500 of investors or thousands of investors just doesn't work. You need to be very clear, and you need to select, like the way investor selects that which company they need to invest in. In the same way, before you begin a process of seeking an investment, it's very important that you must also select that which investor I need to onboard, you know. And I'm sure if you start with 10 or 12 of them, you will end up getting one of them with your perseverance, with your ability to be agile and flexible, because they will keep asking you to modify the business model, because you know, they feel that that will enhance the valuation of a company, that will enhance their exit you know, multiples. So that is why, you know, you will need to really keep pivoting your business model even before they come formally to invest in your venture.
Yeah,
so
it's a symbiotic
yeah,
process.
is that okay, Surjit? Have I covered everything what you wanted?
No, I think you're covered. As you rightly said, it's a symbiotic process. It's a give and take. You cannot send 200 emails to a potential investor and try to get responses of, say, 50% out of it. Then you shortlist, and 10 calls you for pitching and all those things. I think it's very critically important what you really said about must know facts before fundraising. You know, these facts are very important. Research, sell your idea, update long presentations, highlight your financial prospect, seek the attention. These are the key mantra, as you rightly said. I also wanted to understand from you what is the life cycle of a company in terms of funding, which means the pre-seed, seed funding, seed and early stage financing, traditional financing. Because you know what, there are a lot of times when uh, 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 a lot of deliberation goes internally in terms of idea of incubation, development of finances, growth capital, and I think there is a huge cycle in which the entire thing operates. Now, what happens that we only highlight as a startup, as an entrepreneur or a potential entrepreneur on the key elements. But what happens that in this three brackets, sometimes the potential investor vis-a-vis a startup get lost in this entire value chain. So what would be your key mantra that people should highlight on while deciding this particular factor?
Yeah. So I think, Surajit, this is a very pertinent question. And so I think in order to increase your success, see, everything in entrepreneurs is about increases the chances of success. Yeah. So one of the things I like to say, and I have seen it, like when people go and pitch their idea. So since they have not done their homework well, so what they do is, I need 5 crore capital. And I go to talk to an investor who actually is going to fund only 200 crore minimum. So,
Right.
there is a clear mismatch because you've not done your homework well, and that actually creates a lot of noise. And while, you are not going to get there where you would like to because you've never targeted the right audience. So, since you asked me that what is the life cycle of a company? So typically, when you start a company, depending upon the venture that you are in, especially in healthcare, because each facet of healthcare would follow a traditional and, it may follow a exponential growth. So if it's case of, let's say, hospital, expansion in hospital will be very slow. It is not going to be like, the way you would see in an app like Practo app. Practo app can grow much faster, because it's the B2B, it's an internet based, so the growth is very fast. Whereas a hospital or a pharma company, before a pharma companies actually introduce their product to the market, they have to do lots of clinical research. And the kind of money they will require, the kind of gestation they will require is very different from what you would see in a hospital versus a digital healthcare versus a contract research. So I think every subsector of healthcare will have its nuances. And so it's very important for you, one is to understand that which sector or subsector I am there. And depending upon which sector I am there, one needs to actually see the comparables. I'm sure every sector has comparable deals that have happened in the space, and try to see, network, learn from those deals, and how I can also, emulate in my business model. So it's kind of a simple thing to do, but every venture will follow its own path. So I have seen companies even after 20 years of incorporation, they still have a turnover like a startup. And there are companies which have just originated last year. They are ready to go for IPO, and now if you look at SME IPO, it's a great encouragement, like I haven't really pitched for SME IPOs, but what I know that a lot of IT companies have actually undertaken SME IPOs, and they could actually do it within 1 year of incorporation. So, like it's a outlier approach, I would say.
Right.
You do have companies which have raised capital within and gone to public markets, like for example, Eris Life Sciences, the company, within 3 years they could go to public market, whereas there are companies which actually even after 20 years they could not approach public market. So it could be intrinsic, it could be extrinsic factors, but I think idea is that each company business model and the funding model will need to be customized.
Yeah. So what I believe, Vishal, is that the success will only be attributed by the fact that how you behave into the entire value chain. But having said that, you rightly said there are large establishments who go very slow in understanding what are the dynamics of the market. Where there are small entities, a small startup who has been in the market for say 2 years, 3 years, and probably dreaming of raising an IPO. Quite a dangerous situation, but quite optimistic and a leap-bound approach. But having said that, the dynamics of the business is very different. But if we consolidate ourselves into our discussion of the healthcare sector, I think there is a minimum life cycle which one should follow, and should truncate the pros and cons, whichever is there in terms of building of the entities. Having said that, you are a very close observer of companies, both startups and large establishments who have been practicing in the market. Can you share with us one or two case studies. One that I remember of is the Dabur one, which is a classic case study, which I think the audience would be delighted to know. If you can very briefly tell us that what worked well for them.
Okay, so Dabur was my entrepreneur experience. So what I like to share with all of you is something that I, as an entrepreneur, have done. And how I could really help my clients to. One of the companies in Mumbai, they approached me to raise equity for them. It's about almost like 6 years back. And I quickly looked at the business model and I said that, how long have you taken to reach to the turnover of 10 crores? They said, we have taken almost like 8 years to reach turnover of 10 crores. I said, okay, so what is it that will make you 200 crore now? They said, no, we can't go for 200 crore. We can't become 200 crore in next even 20 years. I said, okay, so is that something that you would like to look at in terms of investment? Because your chances of raising investment when your business model is like so stagnant, you're growing only at 10%, 12%, nobody's interested. So I think unless and until you have a growth parameter, which is like almost 30 to 50% year in year growth or a quarter and quarter growth, I think you are not investable. Somebody can certainly question me for this because there are lots of companies which did not grew even after raising investment or before investment. But the 95% of the companies, which have raised capital, they had actually grown phenomenally after infusing of the capital. And this is what is simulated before investment is done.
Mm-hmm. So, okay. So that was, while we have discussed this previously, I wanted to bring this case study to the audience. They should understand what works well for them. But I will now take up 3 straight questions from my side. We will take some audience questions and then we will get into a question answer format. What do you think? What do you think that the impact of COVID-19 will have on the Indian economy, and what should be the relevant time to act with respect to the startup incubators? What is your view on that? This is followed by a question, which is, do you think that this COVID-19 brings a disruptive challenge or a scope of disruptive opportunities? And this is linked with the first question, which I asked: the impact on the Indian economy. Is it the right time to act? And the disruptive challenges and the scope of, or maybe a scope of disruptive opportunities.
Sure. So thank you for asking these wonderful questions. I think the message from my side would be very clear. It will be like a, I would say straightforward message. So I think all of us, it's important, those who are into healthcare business, whether we are a startup, whether we are established company, it's time to reboot your business. Like the way, we reboot our disk every day. When we start the computer or a laptop, I think there is certainly need to reboot your business. And of course, we must think that how we can survive this lockdown. We must have a cash flow, and it's time to conserve the cash flow, and we must have a runway for next 12 months, because we really don't know how the times are going to be. So it's important that we actually conserve cash, and thereby we are going to be thriving once the COVID situation improves. Yeah. And it's also very important to make businesses build on the facts rather than fiction, because in the startup world, a lot of story happens, and sometimes investors do buy the story because they like the entrepreneur, and sometimes they don't buy the story. But I think it's important that now onwards, raising capital will become a bit tough, but for exceptionally good ventures, I think there is enough capital available. And I can tell you, being part of the various government stakeholders meet, and also on behalf of investors, that there is far more capital available for healthcare that you can imagine. But the question is to be able to create an investable business model. And I think that is where entrepreneur has to think microscopically and actually reboot the business model to suit to the investor's need. But I can assure you there's enough capital available even in the COVID time, and it will continue to be during the post-COVID. And of course, it's a time to actually prove the leadership. So steady leadership will essentially help us win the battle. So it's time for you to, really stay afloat and prove your leadership. Learn from others and see how you can quickly, quickly adopt to the change and have a dialogue with your employers and other stakeholders, to employees, to vendors, to, negotiate. It's time to negotiate, like even in the best circumstances, if you are in. And but I think there's no harm to make sure that you negotiate with everybody, and see if your rentals can come down, see if your, operating costs can come down. I have personally myself done that, and sometimes it has worked because everybody understands. But unless and until we don't do dialogue, unless and until we don't do submission, nobody is going to say, I'm going to waive off. So it's very important that we must seek support of all the stakeholders that, we are directly, indirectly in touch with. And of course, I think it's very important to see how to restructure our go-to-marketing strategy, because go-to-marketing strategy pre-COVID essentially was something else. And now post-COVID, because of the restrictions that have been posed, I think the go-to-market strategy needs to be totally restructured depending on your business model. So Surjit, this is the first part of your question that you'd asked. Before I turn to the second, do you want to say something?
No, I just wanted to add that, what you just mentioned, and it would be a brave new world of healthcare startups, right? Right?
Yeah.
And while I was speaking to Vishal earlier, he came up with a very beautiful term called CPFT, which is Customers, Partners, Funders Team. I hope you will agree.
Absolutely.
That's what he said. Please treat your customers, partners, funders team with empathy to build a trust in your brand, okay, which is business management and crisis management proven technique. I think that would be the key mantra.
Yeah.
But Vishal, we are left with another 20 odd minutes. We want to take the questions from the audience.
Sure.
You want to add?
So I think you would ask me that what are the disruptive challenges?
Yes, what are the disruptive challenges and opportunities?
I will quickly share that in 2 minutes.
Right.
I think if you have all seen the Prime Minister last address to the public, wherein he said that we all have become PPE surplus, ventilator surplus. I think it's such a great economic opportunity and a self-reliant opportunity that as healthcare workers have created. And so this has led to another area which altogether we were earlier dependent upon on the imports, and how this COVID has presented a beautiful opportunity for, I'm sure, all of us who are in healthcare business to make a difference. And some of the areas which I feel personally, which will take the leap forward. And one is PPE, which I think Prime Minister and of course, our various trade bodies have taken humongous action to make it like a reality. Thermal scanning, all of us are now familiar with thermal scanners. We weren't really sure what it actually can do, but now we know the importance of thermal scanner. Then how to actually do the large area sanitization is something that we must understand, because this is going to be the real need when we go back to the workplaces. And how to use epidemiological and bioinformatics based approach to be able to curb the disease spread. I think this is what China essentially used, and one of the techniques that China used to curb the infection was a bioinformatics approach, and how India could learn from there. And I think there is a need. I feel the under testing has happened, under reporting has happened. I still feel there is a clear need to develop a rapid and accurate point of care test. Like for pregnancy, you have a dipstick, and in a second you know what's happened. It's a good news or a bad news or no news. So in the same way, for all of us, we would need to have access to a POC. And I think the whole world is working towards developing a most specific and most sensitive point of care test. And of course, all of us know about the ventilator story, wherein Mahindra, Maruti Suzuki, they all came forward, and, they had nothing to do with healthcare, but they came forward to respond to this challenge. And as a result, how India could, build this capacity. And of course, then vaccine, all of us know that there are 6 companies in India which are working in different stages and different collaboration with other countries to be able to put together a great vaccine. But I think even if vaccine comes, we don't know how effective it is going to be. So I think what is really important is that we continue to stay safe. We continue to use our wisdom. to be able to make sure that we don't get infected. Because right now the ecosystem, the supporting ecosystem from the government is not that favorable that we can depend upon government. I think it's what we need to depend upon is ourselves, and what we can do to control and curb the infection, and how we can be a part of the solution to the government rather than asking everything from government, because government is also grappling with so many challenges, right? And there is a huge surge of businesses. I'm a part of 20 plus WhatsApp group, and every group is talking about sanitizers and whether herbal or whether
I read a very beautiful article this morning. It said make in India, made in India, was in India, and it says now in India, so it's a beautiful thing. So Vishal, I have a surprise for you. I have in the audience Mr. Anjan Bose. He was the former founding Secretary General of Nat Health and former President Philips Healthcare and Consumer Lifestyle.
So I'm so happy that he's here, because everybody knows him, right? I know him for last 10 years.
Yes. So the idea of having him was that we wanted to have somebody veteran, somebody from the industry who can speak about us, and he's a big supporter of Medgate Today, Medical Fair India. So he has a question for you. So let me bring him to spotlight, Mr. Bose, and it's a privilege to have you with us.
Thank you, Surajit. Am I audible?
Yeah, you are.
Yes, sir.
Thank you. Thank you, Afzal Bhai and Surajit. I would say the topic itself and choosing Vishal to speak on it is a wonderful idea. I think this is the first time that I am being part of a good webinar which talks about funding and which talks about investments in healthcare. So thank you very much, Vishal. Good to see you. Indeed, we know each other well. Vishal, my question is, I'll just focus it on one topic. I think there is a need for a lot of creativity and innovation, not only in terms of technology, but in terms of frugal innovations in the way forward. So we know that 2.5% our FM has announced for ultimate target for spending in public healthcare. But as we have seen, and as rightly told by you and Surajit also, we will need a lot of the ventilators, PPE, and much more than that. So what is your perspective post-corona? Do you think that the startup community can be optimistic, or there would be a concern in terms of investing in startup for health tech area particularly? That's a specific question that I thought I'll be asking, because I believe much will depend. The Greek philosopher, all of us know, Pluto said, creativity, actually crisis creates innovation. So I would say a crisis like this should give rise to a lot of innovation. How to promote that? What will be the role of funding and investment on that?
Sure. First of all, thank you, Anjanda, for asking such a wonderful question. And I'll try to do my best to respond to you and, of course, to the audience. So if you look at last 60 days, and I have been looking at how the funding has happened, especially the private funding, the deal flow and the deal closures are pretty much happening the way it would actually happen. And so, and of course, the way government has come forward and through the technology business incubators, the way government has actually funded, like you have government funding schemes like DST, DBT, has funded phenomenal amount of money to the private sector to spur this innovation that you talked about, and you think about an area within healthcare, whether it's about vaccine, whether it's about repurposing, whether it's about supply chain logistics, how to handle about various diagnostic kits, whether ELISA based or RT-PCR, PCR based. So I think there's a huge capacity which has been built, and all the stakeholders of healthcare, starting from ICMR to DBT to NITI Aayog, then of course DST, TDB, all have announced phenomenal schemes to be able to spur this innovation. So if you have an innovative idea, I think this is the most opportune time to raise capital, and this we can vouch for it, because I've been looking at this space for the last 60 days and I've personally supported some of the startups, and this is about the government story, the government putting in money as in the form of grant, Can you get better than this? No, because grant is a grant, and equity is, of course, has its own challenges, right? But the government has really announced huge number of schemes, and there are huge beneficiaries. I can share with you, even as big as Bharat Biotech, Zydus Cadila, as small as the companies like Clean Life. There's so many startups, which have been able to take advantage of these schemes, and it is publicly available. And huge amount of, I would say, huge amount of efforts that government has put together, especially under the leadership of DBT and BIORx, has been phenomenal. I would encourage all of you to go to the website and figure it out, that what is it in for you, because I'm sure there is something interesting for all of you to be able to get there. And of course, as far as private funding is concerned, I can't comment on the government, because whatever government does is always minimal in healthcare, because we are at a stage where, when you talk of R&D spend, when you talk of public healthcare spend, I think we have always been low on that number. But even if government can quadruple it, government can make it 5 times, I think the solution doesn't really lie immediately to solve corona problem by just allocating the higher amount. I think the solution lies in bringing the self-discipline in our own self, and then how we could address it together. I think this is the time government is actually come on board and ask that, let's do it together. I have never seen government actually coming together and saying, we will do it. No, they're saying, let's do it together. So I think this is the most interesting time for healthcare, and I think we will get better. And as you beautifully said, it's the innovation. Innovation happens when you are in crisis, and the whole world is innovating. 190 clinical candidates in today, and Moderna, I think you must have followed the news that Moderna yesterday announced that one of their vaccine candidates is progressing well. And so I think it's like amazing time for people like you and me to contribute to healthcare. And I hope I have answered your question.
Yeah, good to absolutely, Vishal. Good to hear that. The positive energy. I must say, you used the word working together. I just, with the permission from Surajit, want to mention that there is no other better time than now for collaboration. So we indeed have to make together to make it happen. Thank you very much, Vishal, Surajit, and Afzal bhai.
Yeah, thank you, Anjanda, for coming together.
No, thank you, Mr. Bose, because this is a time when the government should talk about leveraging the CSR fund for our businesses, government, and from our side as a stakeholder, we should believe in framing up a go-to-market strategy, which should be restructuring, if required, building a consumer sticky business. What Vishal has indicated in his previous slide, because we need to tweak in the approach. The government will not tweak in the approach on themselves. They need to ask the stakeholders what needs to be done. I think it's a very predominant approach from our side. So what I will do is, Vishal, I will pick up few questions which has been shared, and some of these questions I'm picking up are interesting. I think that fits into the frame of this discussion. This is the Dr. Veera Prasad Makinedi, if I hope I pronounced rightly. And Dr. Veera says that we are having 3 hospitals in Hyderabad and looking for more and running units to add under O&M. Let me know leads. But at the same time, there is a person who has asked, I have my project ready with projects in from single specialty chain of hospital. What should be my approach with financiers and bank in this current situation? What should be the equity debt ratio I should target? And that person is Dr. Major Pankaj N. Surange, Director, IPSC, India, New Delhi. Vishal.
Yeah, so thank you, Surajit. So basically, the quick, formula for sustenance as far as financial structuring is concerned, it's equity to debt should be 1-to-1. Because if you look at the hospitals which have gone for, I would say, I call it financial engineering or financial ICU, their equity was just 10% and they were loaded with debt of 90% and they could never see the light of the day. So it's very important that your equity and debt ratio should be 1-to-1. And if you can get this right across the life cycle of your hospital, I think you will essentially be able to create a value as an equity stakeholder and also thrive in solving the healthcare challenge that you have taken, and such a noble service. Yeah. So I think in a nutshell, I can share that, because otherwise it's kind of a very consultative question that he's asked, and happy to take it offline. Yeah. So in interest of time, I think this is what I would like to share in gist.
Sure. The next question is from Gaurav Banerjee, and he says, how do we value our company, particularly when we are in the phase of IP development? The CA valuation completely ignores the IP valuation. Very interesting. Also, to your perspective of business growth, what should be a good ROI period and break even for an average startup working on biopharma technology? If say the investment is the scale of $2 million, time frame is 3 to 5 years.
Okay. So I think it's a very interesting question, and biopharmaceutical is something which is my passion, because my first job was all about biopharmaceutical.
Right.
So thank you for asking this question. And IP valuation, essentially, I think in general, the valuation is actually a science and art. But when it comes to IP valuation, I think it's more of a science than just an art, And there are clear established methodologies which are available to value an IP, which could be your patent. I'm assuming if you're working in biopharma field, then it is about intellectual property, and that is largely a patent. So there is a way to value a patent, and there is a technology, there is a technique that generally people use, and which is recommended and very much harmonized across the world, which is called discounted cash flow. Because even your IP will also essentially contribute to the cash flows of the business, right? If it sees the light of the day. So I would just like to share one line that's about it, in terms of methodology, which is called discounted cash flows method, and of course, I'm happy to respond to you one-on-one at an opportune time. So I hope it addresses the question.
Sure. There is also a question from Sarumati Dhanapal, and the question is for you. What is the way forward for those businesses which does not have growth percentage less than 25 years due to its model of business scope? Means not at all business can have an exponential growth. I didn't understand the question. Means those businesses with less than 20% growth per year. What should be the model of the business scope?
So, I am not a founder of your business. I hope I can be one and help you get there. But certainly I can mentor you, and you can reach out to me directly, because the question itself is not very clear to me.
Not very clear.
And, so Surajit, if there's a way to broadcast my phone number and mobile,
sure. I will do that.
Whatever, please do that. Yeah.
There's a question which is very short and sweet question from Ashutosh Kumar. Do you think that the COVID is going to affect valuation?
Yeah. Yes, I think it's an interesting question, and I don't think I have the right answer, but I will make an attempt. And I know Ashutosh is a professional, valuer. So I think just to share a perspective, it will certainly, have an impact. But depends upon which business model you are in. Let's say if I were to compare Zoom, so pre-COVID, Zoom as a company was just about $1 billion company. But now, again, don't quote me, I don't have the official number, but what appears in the media today, and on a WhatsApp, it says it has become $50 billion company, which is combined turnover of all the airlines of the world, right? So what pre-COVID has been the valuation of Zoom, and 50x or 100x multiple is nothing but, clear manifestation of the COVID. So it all depends upon the business opportunity, the business model that you are in. And certainly, it is going to impact, whether negatively or positively. It will certainly depend upon the business model that you are in. But my optimism, in healthcare would be that all the business valuations will go up, as far as if you're addressing the real need. So if you're addressing the real need, there is no reason for you to negotiate at a discounted deal. Rather, work with people like us to be able to get your premium, because you are a premium right now.
Okay. So, Vishal, I will take two more questions. One is very interesting, and that is actually a business opportunity for you, because somebody said, Ashish Shaluja, how can I take mentoring from you? Offline, definitely. Vishal comes with a fee. so you can probably do that. But there there's a very interesting question, which I really found it funny, interesting, and very serious. Will investors put in monies now in telemedicine clinics? What are the parameters there? Because bulk of the investment required is for marketing only. Very, very interesting question, I would say.
Yes. So if you can tell me the name of the person who's asked this question, I can address it to him then. Yeah.
This is V.S. Venkatesh. Sorry,
Okay.
I should have told the name. V.S.
No problem.
Venkatesh. Yeah.
So Venkatesh, I think thank you for asking this wonderful question. I have been looking at telemedicine as a investment subject for last 4.5 years, and I feel there is no better time than what actually right now for telemedicine. One, the key driver is that the government has come forward with the tele regulations, which earlier was not there. Of course, it was just a guideline, but there was no mechanism to push it. But some of our, I would say partners have worked really hard to work with TRI and of course Medical Council of India to push the telemedicine agenda. And so certainly investment in telemedicine is an opportunity that all investors will look for. But considering that the growth of telemedicine in last 4 years, hasn't been very phenomenal, even after raising the capital, is actually throws up a challenge. And I think it's about adoption. So everything will depend upon how doctors sees this now. So doctors are very comfortable right now, to be able to do telemedicine, because otherwise they are not earning OPT, Like for my mom, I remember, I had to undertake a consultation and the doctor said that, okay, it's okay, you can pay me on the Paytm. And he was very absolutely fine with it. But, going forward, will he like to see her in person and then get a payment, or he'll continue with the telemedicine? We don't know when the times become normal.
Yeah.
So there are, I would say contrasting situations which may happen and which may be favorable for telemedicine. But I think in general, telemedicine is going to be an area which is here to stay. And I have seen, that some telemedicine companies, in spite of providing even teleconsultation for 0 rupees, they have not been able to grow the business, at least pre-COVID. Now, I can't share the numbers of post-COVID, but eventually, there are more than 1,000 plus companies in India which are offering telemedicine services, whether with 1 consultation a day or whether 1,000 consultations a day. So there are various business models that have emerged as a result of teleconsultation. And but the good ones, I think, will survive for sure. And they have also been able to raise decent amount of money. Only 5 to 7 in next 1 to 2 years will survive. And they will become the dominant players in telemedicine. And then they continue to serve not only Indian patients, but they will actually become the force to serve, and consult anywhere across the world, because we have got the best talent and best doctors in this country.
No, I think you covered most of that, most of the questions which are predominant, and we have taken as many questions as we can with the given time frame which we have. So before we conclude, Vishal, one punchline message before we close this webinar, and something like which you think will be the new normal with respect to the healthcare sector, with respect to funding, with respect to merger and acquisitions, because by now India will soon become a startup capital. A lot of people are ambitious, but the norms will change. So one final punchline which you think will survive in the long run from now. And when I say long run, we don't know how the long run would be. It could be 2 years, 3 years, 5 years, or almost a decade. So your final views.
Yeah. So I think since the topic is about fundraising, there is a possibility that your business model may be able to generate funding, and there is a possibility that your business model may not be able to generate funding in next 2 months. So I think even in both the scenarios, you must have a kind of a view that I will conserve cash and I will become the strong person. I think it's important to stay motivated, because the times are really going to be tough. So if you are a optimistic person and look at I would say scenarios where you can encourage others, and of course don't go after valuations, because while I said that healthcare businesses will command premium, but on the serious note, if there is an investor who's really seriously backing you and who has a good understanding of your sector, don't look at valuation. Look at the person. I think that will make the difference in your company's future. So right now, look for a person or a mentor or an investor who can really stand by with you and offers a complementary skill set to your business model to achieve the impossible possible. I think that is what I would like to say, because businesses are not built for corona time or non-corona time. Businesses are built for future, and they're built for sustainability. So it's important that whosoever you marry with, if you decide to go the investor way, I think it's very important you must do thorough research about that investor, and seek support of people who actually know the art and science of doing fundraising.
So thank you so much, Vishal, because the market will not be only dependent on art of funding, merger, acquisition. It will now be dependent on how do you want to leverage the opportunity. With those words, I think Anjan sir has something to share. I bring the spotlight to him, and then we close the session.
No, I just have one quick comment. First of all, compliment Vishal and Afzal and Surajit, of course, for a great subject and refreshing discussion. I heard someone talking about various phases of this corona, and I picked up one, the 4 R's: respond, reset, reboot, and re-energize. I think we are going through a response phase now, and whether we accept or not, it is better if we accept. I think there'll be a huge reset, huge rebooting need, and finally, we have to re-energize ourselves. And in this, what Vishal mentioned about Zoom and telecom companies, I'm associated with Silicon Valley companies which deal with artificial intelligence and machine learning and augmented reality. I would put my bets in a big time on digital technology, which is cutting edge, like AI, ML, etc. Because anything that is remote healthcare, I'm talking about healthcare now, and which increases efficiency, which reduces cost, like AI, ML using bots, robots, digital nervous system, for example, is going to be big time successful. Just wanted to say this, possibly as a guide to the many friends in the startup community. Thank you, Surajit and Vishal.
Wonderful, wonderful. I think those are golden words coming up from experienced person like him, who has led such leadership roles and also driven the market constantly. With this, Vishal, I take the opportunity to thank you. I take the opportunity to thank Afzalji. Afzalji, thank you so much to bring in platforms like this, which are so relevant. And at the same time, I would also direct that, anybody who would like to ask questions and want to go one-on-one with Vishal, so you can note down, Vishal is reachable at vishal.gandhi. It is vishal.gandhi at BIORxVentureAdvisors.com. And you can, Vishal, am I allowed to share your mobile number, or they can only go through your...
Yeah, it's fine. I think mobile works the best. So
okay.
I'm also just sharing my mobile number because they asked for it. So
yeah. So anybody who is interested in telemedicine of their venture capitalist or funding with Vishal, please go ahead and do that. 981-000-2334 and 98107023334. And I think he's reachable, and his website is quite active, and you can reach out from his website as well. Thank you so much. With this, I would request Afzalji to say a few words, and then we take the opportunity to conclude the session.
Thank you so much, all attendees and speaker, Mr. Vishal Gandhi, Surajit Bit, for wonderful moderation. And I would like to thank also the team working behind the success of this webinar. Thank you, Anjanda, joining this wonderful session and your comments. And we need always your blessing for our another webinar, and definitely we will do something in your guidance. Thank you so much.
Thank you.
So Surajit, I have concluding remarks if you allow me to do that.
Yeah, absolutely. Because okay. I was coming back to you because this was a wonderful initiative which was done by Afzal, and I think with Medical Fair, Medgate Today, and which is powered by Medical Alliance, we'll try to bring this kind of subjects into picture, so that we can also have a niche kind of a discussion while we deliver and address a certain industry sector. So Vishal, again, final words from your side.
Sure, thank you. So I think I don't have to say anything other than thanking each one of you. So on behalf of my company, which is BIORx Venture Advisors, I'd like to thank Medgate Today and Medical Fair for such a great partnership, and putting this together for us. I am very, very delighted and very happy, that this could come about, and special thanks to Afzal Bhai to risk me on this, and and of course he risked you as well. So you also need to be thanked for. So I hope it was great from your perspective, and we'll try to do and we'll try to work with you again on this, making this more wonderful. And of course, last but not least, I'd also like to thank our outreach partners. We had taken help of various other industry associations, including AMED, which is run by Dr. Rajiv Nath, and BDMA, Bulk Drug Manufacturers Association, IDMA, ABLE, FABA, which is like Federation of Asian Biotechnology Association, and I kind of work with the Northern chapter here, PharmExcel as an organization, and of course my own alma mater of University of Hyderabad, where we have a wonderful bio-invest incubator, where one can go and see that what a technology business incubator can do to spur the entrepreneurship in the biosciences area. And so I think with that note, I'd like to thank each one of you as a wonderful audience. I think you've been very patient. We've been able to retain you. I think it looked as if it made sense for all of you. But I think it's a great beginning. And so as Surajit has already shared my contact details with you, please feel free to reach out to me. And it will be great to see how I can mentor all of you and make your business model more investable and create value for each other. So with that note, I hand over back to moderator, our wonderful moderator, Surajit.
Thank you, Vishal. I think it was a pleasure. It was a pleasure having you with us. And for the audience, Medgate Today and Medical Fair India will continue to bring such episodes which are relevant for the market, stakeholders, and the community in large. With this, I certainly wanted to wish all of you, your teammates, family, and your loved ones to stay safe in the current corona pandemic. Until we meet next, thank you so much and have a great day ahead. Thank you so much. Bye-bye.
Thank you. Thank you, everyone. Thank you.